All right. This is a trade recap of January 2nd, 2025. Going to be going through the charts and noting what I see or what I saw throughout the day. So, starting off, this is the daily candle for Thursday, January 2nd. This week, Monday, Tuesday have been bearish. Obviously, Wednesday was a bank holiday with it being the new year. And here is Thursday. Obviously, a bearish close. We took out this low, which was not last week's low, but the previous week's. Um, so that's a significant low, but the amount that we came up off of it might be indicative of a retrace up to this, but we'll have to see what tomorrow brings for that. Going down to the hourly. Let's bring up these again. Sorry, it's a whole lot of lines, but it'll make sense as we go into the lower time frames. So actually, you know what? I'm just gonna turn them off for now because I don't. I'll turn them on once we get back to the 15. All right, this right here is 7 a.m. As you can see, overnight session. So Asian in London was going up, right? Asian started the move, London continued it. And so what do we know? London has like a bullish expansion in this example. New York's going to have a reversal. That's just usually how it is. And New York doesn't waste any time. Starting at 7, continuing down. 9 o'clock, we had a kind of big rejection. I think this was to trip in retail long, which was this huge wick here, and part of this buy side wick on the 10 o'clock candle. As we can kind of see with this wick here, it's kind of hard to see with all the other lines, but it stops just after equilibrium. Sorry, not equilibrium. Concentrate encroachment of this candle here. Now, back to the raw chart. 10 o'clock, continuation lower, didn't break this low yet. 11 o'clock, started the bullish move, which we'll see later, turning into the lunch, which then is short-ended because we are so heavy in price. The 12 o'clock candle and the 1 o'clock candle come down and take out this low, and then immediately come back up to close. Something to note is we did close within this. Not sure if this is going to hold once market opens and Asian and London take over again. So now down to the 15. I can probably bring in all of these now. It's going to be confusing, but I'm going to run through it all. All right. Here we are again, 7 o'clock. And the reason we came up here, because if London was bullish, as it was, why would we not turn around immediately at 7 o'clock, right? 7 o'clock is pre-market, New York session. So why wouldn't we just continue the pattern and reverse during New York? Well, that is because I have to bring up ES. This high, Monday, December 30th, is taken out during this 7 o'clock candle. So the reason that NQ went up to start at 7 o'clock before turning over was because ES wanted to take out this high, right? Now keep this high in mind. Monday, December 30th, right? If we go back to NQ, that's this high, Monday, December 30th. We were not even close to taking this high, which is a high time frame SMT, which is leading to another thing on the bias of being bearish on the day. So as we move past that, once ES has swept this high and starts to collapse, a 15-minute fair value gap is left, which at 9:30, when 9:30 starts spooling, because 9:30 is a common time for price to start spooling in any direction. Well, no, it usually has a reason, and in this reason, it is to allow smart money a more expensive price to enter shorts. So it comes up, reacts off this 15-minute, notably closing below constant encroachment of this 15-minute SIBI. Then price, once again, tumbles 9 o'clock, and then market opens at 9:30. We see this huge bearish move down here. I'll come back to cover this 5-minute on the 5-minute time frame. And then from 45 to 10, we have this huge retrace, early 10. We come up here as well, reacting off of yesterday's first presentation, fair value gap. And then after that, I actually had this 15-minute highlighted beforehand, expecting price to stop there. But what price was really looking for was this 15-minute inverse. And the reason this one worked and reacted is because it was used bullish beforehand. If we see here, price reacted off of it, came up, rejected it, came down again, rejected it once again. So this fair value gap has been used in the bullish direction. And once we break it down, that makes it even more likely to be used as an inverse if the overall bias is bearish, which it is. So we use it, takes it down, and then we fail to take out this low in the first pump. And then we get close to lunch, which, for those of you that don't know, lunch tries to take the nearest liquidity on what has been made profitable in the AM session, and for this example would be sells. So it tries to take out those highs, trying to stop people out of their short positions, those who had moved their stop lower. So after it does that, creates an SMT here, once again, because ES does not make this high. Now pay attention to these times, 10:45 and 11:45. If we go to ES, 10:45, 11:45. See how 10:45 high is lower than this 11:45 high. If we go back to NQ, 10:45 high, 11:45 high is higher. So that's an SMT leading to tell us that it's going to continue the bearish move relatively soon. So after that, price does its thing up here for a little bit, consolidates and whatnot, and then finally expands lower, taking out AM high, taking out Asian session low. I don't even think AM session started. Well, yesterday's low, and then all the way over here is what we discussed on the daily time frame, Friday, December 30th low. But as you can see, it takes it out very shallowly. It doesn't close anything. It just has a bunch of tiny wicks, which makes me feel that we are going to get a larger retrace. So maybe overnight session. So Asian and London, we're going to see more of a rally, but we also have TGIF tomorrow. So all of this is stacking up to, depending on what London session gives us, making me feel more bullish for New York session tomorrow. All right, down to 5-minute. Starting up here again, bullish move, so ES can sweep, stops it. Come back to these on the 1-minute, breaks down, uses this 15-minute fair value gap as support up to this 15-minute, which then starts to break down. We break down. New York opens, tanks, reacts off this 5-minute here. See this gap here, extend that over, candles close in it, price reacts off of it, comes up, taking out internal buy side liquidity here, reacting off of consequent encroachment of previous day's first presentation for value gap, closing and keeping the bodies within this 15-minute inverse fair value gap, even on the 5-minute chart. And then we expand lower. So you can see here we tried once, up, one more time, failed, and then what's the time? It's 11 o'clock. It's likely to There's not likely, it's possible for lunch to start reversing now, and it does. What does it do? It aims for recent highs, right? So what lunch does is it can aim for the nearest buy side liquidity created after 10 o'clock, I believe, which is here. And since we are and were so heavy on the day, it comes to this one and not this one. So we react off this one, create this SMT, which lets us know that price is likely to react bearishly here and not take out this high. Price meanders a little bit. I'll come to this on the 1 minute, and then it expands lower, taking out this low, yesterday's low, and then this Friday, the 20th low again. Even on the 5 minute, you see the lack of dedication, I'd say, to continue lower after taking out this low. Then we get an SMT of these lows to round us out with the daily candle closing off the low of the day. Now on the 1 minute, I'm just going to go through everything quickly. 7 o'clock rally, so ES can take it, using fair value gaps to support it. Starts breaking down. Here's an inverse to help support us lower. It's 15 minute, used once, twice for support, breaks through it. New York starts with an SMT here. SMT, I mean, none of this is actionable with my current experience level, but we have an SMT here, which could have been used as a turtle soup entry to take shorts down to this 5 minute, which we then react off of, playing bullish. And as you can see, right as this macro starts at 950, price starts acting perfectly according to the script. Boom, 951 taps. Let's look at this low. 290.50. And this low is 290 exactly. So just enough to allow smart money to enter there before it rallies up, taking out this internal buy side. And this one I'm not sure about. ES took out this high and NQ didn't. I'm not sure if that would count as an SMT or if it's kind of like if this is even considered a high, but I did, and it kind of works. So we'll see there. And I mean, just look at these candles. Look how big these wicks are up here and here. There's not much that's convincing about this. We had this little expansion here, which probably tricked in more amateur traders. But once this was up here around this first presentation, I didn't notice this 15-minute inverse during that, only when I went back in the charts after. That's when I noticed it. But once we took off, what I was looking for, because I saw this, and once again, I saw it being supported as a buy side for value gap or a buy side inefficiency. No, buy side imbalance, sell side inefficiency. And since I was looking for it to be bearish, I was actually expecting this to be an inverse. However, after all this wiki kind of going nowhere price action, this huge candle distracted me. I saw this gap form and I said yes. So I put my limit order there. And as soon as price took off and closed down here, I knew it was already gone. And of course, that's when I remembered this gap here is an inverse. So I need to start actually highlighting stuff because I saw this and I didn't highlight it because as you can see, there's a whole lot on my chart right now. And I didn't want it to sway my bias or anything like that. But it ended up just making me forget about it, which is unfortunate because after that, price comes down. My profits would have been at, actually, let's see. For here, my stop would have been above this to allow for this fair value gap to be used. First stop at 1 to 2. Probably would have put a consequent encroachment of this first presentation, today's first presentation. I would have extended my second take profit to today's new day opening gap high, and then the low, and then my finals would have been down here. So, as we can see, this is all within the macro as well. This move here that comes up to start the rounding of the downturn starts during the macro. So that was another thing that got me going that way. And here price starts slowing down, losing momentum. We come up to take buy side to try to gain some, take out some buy stops to try to get us to go lower, and it works. We take out this low, but then it's 11 o'clock, and this is a high resistance liquidity run. Price is being dragged up for the lunch move to take out buy side, since sell side has been profitable most recently. Again, I'm not going to show it again on ES, but SMT between this and ES, and boom, another expansion. So SMT expansion, this is my model. So I'd enter here with my stop above this candle for two reasons. One, so price has the ability to work through this candle, wick through this candle. And two, because since an SMT happened here, if the bias is bearish, this high should be protected. And so price reacts off of it once, comes back up and visits it, closing out of it, but that's within reason. And then price finally takes off, tumbling, taking out again, morning low, yesterday's low, and then all the way down here, Friday's low, hits it, again, no conviction, not trying to continue the move, consolidates. We get an SMT here, the algorithm kicks back in here, sell side is taken first, create a breakaway, boom, come up using this buy side imbalance, sell side inefficiency to gain orders and move us upwards. Now, if this was a trade, since there is not much to work in here in terms of liquidity for profits, I would have used fib extensions of this move, since it's the move that took the liquidity and is the move prior to the move of my entry would have been, because I was not looking at the charts at this time. So if I entered here, my profits would have been, well, my stop would have been under this one to allow for price to come back. And so I would require 1 to 2, so I wouldn't be able to have my profits here because that's a 1 to 5. I might have put it here for profit 1. Profit 2 would have been here. Profit 3, maybe final, would have been here. I don't think I would have extended it that far because I don't really know PM session, and I wouldn't expect much out of it in terms of volume with the volume we had in AM session. Oh, I forgot to talk about this 5-minute, but we have a couple buy-side imbalances here, propelling price upwards. This bearish move here is a 5-minute bullish order block. You can see price reacting off of it. No closures below it. I mean, look at that closure. That's perfect. Price comes back up into this range and meanders off, and here we are closing for the day. So that was the not trade recap, but market recap for January 2nd, 2025.